Welcome, it's denome. Today we're looking at the tariff opportunity. Now, I know a lot of people are scared of tariffs and they think it's inflationary and there will be a lot of problems from tariffs. And I certainly subscribe to that category, but also whenever there is a crisis, there's also an opportunity. In fact, when you look at how most millionaires make their money, they actually make their fortunes in times of crisis, and then they basically benefit from the crisis when times start to become good. But as times are good, there's less and less opportunity out there because everything starts to be overvalued. So whenever there's a crisis and prices go down, then there's another opportunity. And right now we are basically in the doorsteps of opportunity. Now, before I give you all of my ideas how to make money from tariffs, let's actually take a look at some of the big trends so you actually understand what is going on here so you can exploit these new trends. So first off, manufacturing is going back into United States. So as manufacturing goes back into United States, there is actually going to be a 2 to 4 year gap before the manufacturing is in full speed. Even the biggest $500 billion investments that now are going into United States in forms of robotics, AI companies, building and manufacturing in United States, before these facilities become fully operational, it will take 2 to 4 years to train people, to have that experience of the employee workforce and to make it competitive in the markets. So it will take time before these actually start to turn a profit, and before obviously you need to build these facilities first, and it just takes time. As you saw with China, it took 40 years for it to become this manufacturing giant as it is now. It will not be immediate effect of these tariffs that manufacturing will instantly overtake China. So there's going to be a gap, and this gap period, this is basically where the opportunity is hiding. But it also means there's going to be a lot of pain before this materializes into actual wealth for Americans. But right now, there's a trend of construction, and a lot of construction is needed for all of this manufacturing to basically start. So construction will see a boom, obviously, in the United States. But as another trend with tariffs, with protectionist policies, there's going to be less imports flowing into United States. And in the short term, before this manufacturing is going back into United States, before the importers have time to basically manage their supply chains in a way that they minimize the effects of the tariffs. So let's say right now they import directly from China. Maybe they want to first move it to Europe, and from Europe send it to United States with lower tariff number. But right now, in the immediate term, there is going to be shortages because it's simply not possible to sell a product before which cost $10 and now it costs $25. So that will create shortages, and we are seeing a massive drop in shipping containers going into United States right now. And the biggest hit will be seen in May and in June. That will be the biggest hit, obviously. And shortages, they actually create inflation because obviously the tariffs themselves, they are paid by the importers. If you are buying stuff directly from China, then you pay the tariff. But even if you buy through Walmart, Walmart has to pay the tariff and push the tariff onto the customer. But there's another way how shortages create inflation, which is that as uh, as the importers like Walmart and Target and other companies, when they cannot make as much money from the stuff they previously made money on, they will have to make the money selling other stuff. And to cover basically the lost revenue, they have to raise prices even on the non-tariffed goods, and that will also create inflation. So I do expect practically everything to become more expensive in the United States except energy. So energy will probably actually, it might go even down from these levels because recessions typically mean that there's less stuff moving around, and because less stuff is moving around, then there's less need of energy for transportation. But all in all, I expect the prices of goods to go up in price. Then from these less imports being more expensive, I expect less economic activity overall inside the United States, and for that I do expect less GDP. And because there's going to be less GDP, then I actually expect there's going to be a recession down the line. We already saw Q1 of 2025, we saw a contraction of the GDP, and recession is basically just two consecutive quarters of negative GDP. So we already have the first one, so most likely we're going to see the second one because the tariffs were actually implemented in April, and we already had the a negative quarter. So I do expect even more negative quarter for the Q2 of 2025. So recession is practically guaranteed right now. And I wrote here that housing prices might be going down as a result of the recession, but there's also a reason why housing prices might go up. But I will come back to that later when I talk about the opportunities. But all in all, I do expect a recession inside the United States. These, in my opinion, are the big trends in the United States right now. And these are also areas where we might be able to make some money. Now, before I talk about how to make money, let's actually talk about the trends outside the United States, because these are a little bit different, because the tariffs are implemented by United States. So United States is the biggest area where the tariffs have an effect, but they have the opposite effect basically outside the United States. So for countries outside the United States, because of these import tariffs, there's most likely going to be less sales into United States across the board. However, some countries that work as a like a hub between China and United States, where first the stuff goes into that intermediary country, and from there it goes to the United States to avoid the tariffs, they might actually see more imports flowing into United States. But overall, I do expect less sales overall to go into United States, as United States companies are focusing on selling into the domestic market. Then I do expect there's going to be an oversupply of stuff outside the United States because of all the stuff that is now being made in China. That oversupply, before the factories have a chance to adjust their manufacturing capacity, there's going to be an oversupply of stuff, which means that there's probably going to be a huge discounts for countries or people living outside the United States. So if you are a retailer, for example, that you import stuff from China and you sell it into Europe, you probably are going to get extremely good discounts, and you may still be able to make a very good profit when you sell to the European market. So retailers in Europe probably will be doing quite well during this time. And then because there's going to be an oversupply of stuff and less sales going into United States, I actually expect that there's going to be lower GDP even for countries outside the United States, because United States is the biggest customer for the planet. So if that customer is suddenly taken out of the equation, I do expect practically every country to make lower GDP overall, less economic activity, even though there might be some very good discounts with some companies. Overall, I do expect economic activity to go down. So overall, even though there's going to be lower prices outside the United States and higher prices in the United States, I do expect recession practically on a global level. And that's not obviously not going to be great. But when we talk about the overall effect of the tariff policies and all these things, like I said, I expect recession overall. I expect more trade barriers between the West and the rest. And I also expect trade barrier avoidance to increase, which means black market will increase, or black market products will increase. Then I do expect more necessities being manufactured in the Western countries, and this might actually be bad for countries that have are exporting a lot of stuff to the West. And I'm not only talking about the United States, I'm talking about other Western countries, because recession overall usually it increases the risk of conflicts, and that also basically makes every country become more protectionist. So what I expect to happen is that investments will flow into protectionism, or industries that benefit from protectionist policies. For example, domestic energy manufacturing. I expect that to have heavy investments. AI. Well, this is a little bit difficult because AI is now being developed. I think half of the smartest AI people are in China and half are spread across the other countries. But AI, domestic AI production will probably increase. Weapons manufacturing will increase. Mineral refinement will increase. Overall, uh, critical infrastructure, critical technologies will have domestic growth, and crypto might see growth as well as a neutral, uh, like a it's like a counter narrative to protectionism is neutrality. And crypto represents neutrality, that you can basically trade outside the governmental uh, payment systems and outside these protectionist policies. And black market also works in crypto. So I do expect crypto investments to go up as well. And you know that USA is probably giving some tax cuts for crypto investors, and they might even give subsidies for domestic crypto companies. So crypto most likely will see more investments and more focus, as other countries basically want to dominate that space as well. I will come back to that later. Then let's talk about recession before we talk about the opportunities. So during a recession, there's an increased risk of conflict. So what happened after the dot-com bubble, for example? That happened in the year 2000. Well, it only took one more year for us to see 9/11. And from there, we saw just a massive ongoing wars by the United States and the Middle East. So when there's a recession, when the economic policy internally is bad, countries are incentivized to shift focus outside of their own country. So during recessions, there's an increased risk of conflict. So keep this in mind. This is one of the reasons why I do believe that weapons manufacturing will go up in value, as well as Donald Trump already said that they will increase the Pentagon budget by $150 billion. And then I do believe necessities will go up in price, because domestic production will go up, but domestic production is more expensive than imports in most of the cases, because if it was cheaper, then would already be done inside that country. So I do believe necessities will go up in price. Entertainment, typically during a recession, entertainment does well because people want to forget their problems, and they want to focus on something that that they can put their mind into. House values usually go down during a recession, so this is typically true. Savings usually get drained because people are laid off. They have to tap into their savings, and as people are being laid off, they also usually have to sell their houses, which makes the housing values go down as well. Then basically, as the recession is happening, then usually we see massive government intervention in the form of money printing. And this is usually where we see the bottoms of the market. Like we saw during COVID, we saw the supply shock when Donald Trump basically said that, okay, we're going to shut down the airports. No more Chinese coming into the United States. The airports are now shut down. No more shipping into the United States. Everything shut down, everything. And after that, markets obviously tanked completely. But then he said, let's invest $6 trillion into into COVID relief and helicopter money or whatever you want to call it. So money printing comes in because it is needed for all of these investments, all of these factories to be built, and also for subsidies against these tariffs for their domestic farming and all these things. So money printing is basically needed across the board. And that is also true for every other country. And money printing creates the opportunity. Now, let's actually talk about the opportunities. Number one, you probably want to buy necessities. And I'm not only talking about companies that build necessities. I mean, I give an example here, toilet paper, because in 2020, when the COVID crash happened, you probably remember everybody went crazy for toilet paper, which was absolutely insane. It didn't make any sense. But during times of crisis, people lose their minds and they go apeshit. So it's probably a good idea to have at least like 1 month supply of basic necessities inside your house. Usually these panics don't last long, and people get past them. They find ways to go around it, but usually people just panic when shit hits the fan, pretty much. So it's a good idea to stock up on necessities, and also think about the stuff that you normally buy from China, or if you pick up a product that says made in China, you probably want to buy those off the shelf now before the price hikes are actually affected in the actual prices when you buy them. So you probably want to stock up on everything that you thought of buying now before we see the inflation wave actually uh, 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 hit the market. Now you probably want to buy some food storages. I don't know what you want to buy there. Maybe some ketchup, tuna, canned food, and probably you want to grow some of your food on your own as well. But overall, necessities, I think it's a good idea to buy those. This is not really a money maker, but this will save you money later down the line. And also, when people buy panic and they go to the grocery store and they empty out the grocery store, it's better that you empty out it first and then the others come in and not panic at the same time as everybody else when the prices are already up because of all the shortages, obviously. Then, second of all, you probably want to decrease spending and increase savings habit. So you can only exploit crises if you have the capital to spare during that crisis. If you have a zero capital to invest, then you cannot really do anything. There's nothing you can do at that moment in time. You have to decrease spending, so when you need to tap into those savings, you can do that. Or when you see that once in a lifetime opportunity, you have the capital to actually utilize that opportunity and not just look from the sidelines and think about, oh, I should have bought it, I should have done this, I should have done that. You have to save money for the worst of days and for the best of days. And optimally, you want to save 10% of your income, and you probably want to invest 20% of your income or even more than that. So 70% of your income you can spend however you want, but 30% at least you should save and invest, in my opinion. Third, you probably want to consider unbanking yourself. So if all of your capital is currently in the banking system, that might be bad, because during recessions, banks may go under. And if your assets are inside a bank, they may be confiscated. Or if the bank goes under, even if you don't lose the capital, if your assets get frozen for let's say 1 year, you might be completely screwed. You may have to sell your house, you may have to sell your car, you may have to do a lot of different things and sell them at the lowest possible prices. And when the banks finally come online and you have access to your funds again, then you practically have to buy everything back at a higher price at that point. So it's a good idea to unbank yourself, which means buying assets that are outside the banking system. Physical gold, for this reason, is going up in price as we talk. Bitcoin and crypto, if you self custody, they are also assets outside the banking system. And this is one of the reasons why crypto will probably see a boom as well as a neutral currency. Gold is obviously great, but it's a little bit hard to move gold between countries, whereas Bitcoin and crypto, you can transact regardless of time zone, regardless of banking hours, regardless of your country. So that's why I do believe unbanking yourself is a very, very good idea. Also, with protectionism, there might be exit taxes, what we're seeing from UK being implemented and in other countries as well, which may limit on how you can withdraw capital out of your country. But if your money is in Bitcoin, it doesn't matter in which country you are in, you can still access your Bitcoin. If you have to quickly get out of the country for whatever reason, you can still have access to your Bitcoin and you can withdraw it in another country using their local Bitcoin ATMs or their peer-to-peer trading systems or anything like that. Whereas if your assets are in a banking system, the bank may decide that, okay, or the country may decide that banks have to now uh, disable all outbound transactions from your country to another country. So you might be completely screwed in that scenario. So unbanking yourself is extremely good. Next, when we talk about crypto, you might consider something called yield farming. So if you don't want to have a directional bias on crypto prices, you may simply have USD and do something called yield farming. You can simply search yield farming on YouTube and learn a lot of videos about this topic. You can watch some of my videos on yield farming. But overall, for example, here, this is from a website called, actually, I'm not going to say the website because I have not done my 100% due diligence on that website. But you can basically earn up to 40% annual yield simply by holding USD and basically borrowing your USD for other investors to use for trading purposes, and you're basically borrowing it out and you earn a yield back. But this, as you can see, this is a leveraged uh, yield farming opportunity, which means that your yield is multiplied, but at the same time your risk is multiplied. So there's a lot of risks involved with yield farming, but this is one opportunity how you can basically make your savings work for you as well while you are saving assets. Next, you probably want to focus on a niche that will grow in the future. So you want to learn a new skill, or you probably want to uh, set up a company in a niche that will go up in value where you see a lot of potential. For example, we talked about manufacturing going back into United States. What better way of benefiting from these changes than to start your own manufacturing company inside the United States? Stuff that previously was built in China, get your own 3D printer and start building stuff inside the United States. Set up your own factory there or in whatever country you are in. Uh, I know it's tedious, but if you have interest in building stuff, this is absolutely great. Also, there's going to be a lot of need for people to be hired in manufacturing space. So even if your company fails, you probably can get hired in a manufacturing company. Or as these new factories are being set up, if you can get yourself in a managerial position while it is being built, then your career may have a very good potential to the upside, obviously. Farming will most likely go up. Trade skills overall will be in high demand. AI, obviously, especially in the United States where they are focusing a lot in AI, but overall, doesn't really matter if you are doing marketing, if you are doing almost anything, content creation, anything. AI is your friend, and you want to utilize AI and start using Grok or ChatGPT or whatever tools out there. And you can find a lot of tutorials even now on YouTube, best AI tools 2025, and watch those videos. It just makes a lot of sense. Crypto is the same thing. A lot of investments are going into crypto, go into crypto events, network. There's a lot of demand, even if you just want to get employed in crypto. Uh, you may want to do that as well. And what better way to, by the way, benefit from crypto but than to work in crypto and invest in crypto as well? So you basically knock two birds with one stone. You learn about crypto by working there, and as you invest, your capital goes up as well. Then entertainment, if you want to become a content creator, this is one of the best times to do that. And a lot, right now, obviously, there's a lot of entertainment value in simply providing news, because as you know, news are completely biased. So if you make your own news channel, then you might see a lot of audience coming to follow you. And overall entertainment, children's entertainment, a lot of woke BS is basically dominating the market. If you have children like I do, you would like children to have better content for their eyes on YouTube and elsewhere. So there's a lot of demand in that space. For example, I do not want to have my children watching Netflix because all of the rainbow stuff. But all in all, entertainment, there's a lot of value there to be seen. Tariff avoidance, this is going into the gray market or black market area, but consider looking into those arbitrages. And all in all, think about what is coming from China and currently not going into United States through China. Maybe you can find a company that, for example, doesn't build in USA yet. Maybe you can contact that company and say, hey, I would like to partner up with you. How can we set up manufacturing here in the United States? With your product, can you help me, or can I help you guys expand your business inside the United States? Reach out and basically bullshit your competence to those companies, and you can basically even set up a company that way, or simply uh, import stuff that you might think Americans might need, but uh, China is no longer reliable for that product, so you may want to buy it from Europe, for example. A lot of opportunities in that area as well. Now, then I will, number 6, I want to talk about rentals. Boomers have become extremely wealthy simply by owning a house. And right now, the housing market is pretty much overvalued. I talked about this before, but there's also been an oversupply of houses due to the illegal immigration that has been going into United States and also Europe and other countries. But overall, there's an oversupply of houses, and if these minorities or sorry migrants are being deported outside of United States, that means there's going to be a lot of vacancies inside houses. So you probably do not want to own a house right now, so you may want to consider selling a house. But at the same time, we know that construction is becoming more expensive because the stuff coming from China, which is needed in construction, will go up in price, especially temporarily. Also, as all of these factories are being built, people inside construction have their hands filled already, which means that construction might become more expensive. And as construction becomes more expensive, that actually can mean that housing prices might even go up in some areas. So even though you may want to consider selling your house, just think about where you are first before you go out and sell your house. But overall, you in some areas inside the United States, you probably want to get rid of your house because it most likely is overvalued, and the housing prices will go down if we see a recession and people are being laid off and all these things. And this also creates an opportunity because in 2008 we saw the great financial crisis and housing prices went crashing down. So when you see distressed properties, distressed owners, you may actually be able to buy extremely discounted houses. And if you have savings available, if you understand a little bit of the housing market, you can benefit from this renaissance and basically buy houses at dirt cheap prices. I had a friend in 2008 who was able to buy houses in the United States basically with a credit card. So that was pretty much pretty insane. But overall, a similar crash has happened time and time and time and time again. And these are basically once in a decade opportunities when we see housing crisis. And the housing prices right now, in my opinion, in most areas in the United States, especially, are in a bubble. So you may want to consider buying a house, but not yet. Wait for the pain to really hit the markets first, and then consider buying houses as much as you can, basically. But right now, you still have time to basically understand the housing market, understand the niche, and find your leverage, all these things. Then consider buying land. Now, why I'm talking about land if housing prices are going down? Well, farmland most likely is going to go up in value because domestic production is going up. Donald Trump has talked about subsidizing the farmers. Farmland will probably go up in value in the United States. And part of his negotiations, he wants American food products to be exported into other countries like Europe and in other places as well. Now, I don't know if he's able to make those deals, but if those deals actually come to pass, then American farmers will have very good times, and the farmland itself might go up in value. So consider buying some farmland, and also industrial areas. If you buy land nearby industrial areas, big companies might come into that area because industry likes to be nearby industry. Obviously, components come from a local company nearby. It's just easy for the supply chains. So industry goes to near industry, and also people near industrial areas probably want to live nearby their companies. So consider buying land near industrial areas or even houses nearby industrial areas. So even though I said overall housing market might go down, there may be some areas that housing and land goes up in value. And obviously, when money printing hits, then land typically goes up in value in the long term as well. And land near schools of cities that open new factories, this should be a no-brainer, but land may be a perfect opportunity as well. Then with other skills, trade stocks. Right now, as we talked about, the renaissance that's going on, protectionist, we're going from globalism to protectionism. You may want to buy companies that you think will do well under protectionist policies. Some of these prices have already been materialized in stock prices, but for example, gold mining companies are still dirt cheap. And I don't exactly know why, except that there's a pricing error from my perspective. Now, maybe I'm simply wrong. Maybe gold mining companies have been overvalued for a long time, but you have to use your own analysis and listen to different opinions. And I'm no way or shape or form professional in stock trading. That's not my expertise. But gold mining companies, in my opinion, just look way too cheap for these current prices. And one reason, or a couple of reasons why I do believe gold mining companies will do well. Obviously, gold prices have gone up, so they get more revenue when they sell gold. And also, oil prices are going down, which means that the cost of mining gold will go down. So it's two effects. Costs are going down while revenue is going up. So gold mining companies will most likely make very good profits in Q2 and Q3 of this year. We haven't heard we don't know how much money they will make during this time, but most likely they're going to make nice profits. Weapons manufacturers might do well. I know a lot of them already went up in price in manyfold, but many weapons manufacturers might have some dips in prices, so you may want to abuse those. Mineral refinement, for example, China, they own most of the rare earth mineral refinement on the planet, and for some heavy magnets, China actually owns 100% of the refinement needed for those heavy magnets. So as the mineral refinement has to basically go outside of China, consider investing into some of that. Construction, steel companies, AI companies, entertainment companies, these are just some ideas for you to think about that might do well. Now, overall, the stock markets, in my opinion, are still a little bit elevated, so we might see another dip in quarter 2. But quarter 3, I think things start to go look much more promising for stocks when we talk about US stocks. Now, stocks outside United States, they are a different thing. Uh, they might actually do quite well. Um, for example, in India, uh, USA has tried to move their buying from China into Indian companies. So stock markets in India might do well. I don't know exactly, but just some ideas to think about. Then number 10, you probably want to trade some crypto assets as well. So for crypto, the most important thing is the narrative, because the narrative drives crypto prices. And then the price starts to drive the narrative. So it's a cycle, and this cycle, obviously it creates bubbles, but it also creates crashes. Because when the prices start to go down, then the narrative is that the bull market is over and you should sell your crypto. So the prices might go down and down and down and down, but eventually the bottom is met. And then suddenly, when prices go up, the narrative goes to the opposite direction. So crypto is a place where there's a lot of bull and bear markets, like bubble markets, and there's a lot of different niches in crypto. Sometimes do well, sometimes other niches do well, but currently in my opinion, some of the best assets to look at is Bitcoin, obviously, Ethereum, Tron, Link, Sui, Ondo, and HBAR. These are probably my favorite crypto assets to look at right now. Now, there you might invest into meme coins, but I don't really want to do that. I've lost too much money trading meme coins, and I don't exactly know how to predict which meme coin goes up and down. It seems to be a little bit too random for me, and insiders eventually make money on meme coins, whereas these tried and true crypto assets uh, usually do well. Meanwhile, everything else is doing whatever they are doing. So Tron Network, it hosts most of the USDT stablecoin on the planet. So that, or actually Ethereum hosts most USDT on the planet, but Tron Network hosts second most USDT on the planet, and the USDT amounts in Tron Network simply go up and up and up. And Justin Sun just had a photo with Eric Trump, who is the son of Donald Trump. So overall, Tron Network, I think, will be doing quite well. Chainlink, it is needed for real-world assets to transfer over into crypto. So it offers Oracle services for crypto. Sui, I don't exactly know what they are doing. I haven't done a deep dive, but I know the price has done extremely well from the bottoms. And this is one of the assets that Donald Trump's family has been buying. So consider looking into that. I don't know too much about it, but Ondo Finance, that has to do with also real world assets going into blockchain. For example, stock trading can be platformed on top of crypto using Ondo Finance. So Ondo, I think they just made a big deal on that front as well. HBAR is one of those US-based crypto companies that might do well as well. They have a very fast blockchain, and recently they started to actually utilize the blockchain, so you can actually use it for something relevant. And it likes to go up in price when Bitcoin is going up as well. Mostly, if you just want to be conservative, just buy Bitcoin. Bitcoin usually goes up, and when things go down, Bitcoin doesn't go down as much. So Bitcoin is the ultimate asset, obviously, out of all of these things. I just recently made a post on X basically saying that crypto is a game where the rules change all the time and the board changes all the time, and many players cheat at all times. Whereas Bitcoin is more like chess, where you know the rules and you know the fundamentals. Each game is basically the same, whereas with crypto, the game constantly changes. So if you want to be safe, just consider getting some Bitcoin and perhaps even trade it and learn about that, which you can do if you subscribe to this channel. Now, again, if you want to trade and make money with crypto, consider opening an exchange account. The exchange account I use and I prefer using and recommending is called Femex. They are also sponsoring this channel. You are eligible for $4,800 in welcome rewards when you sign up using this referral code here, or using the code in the pinned comment below as well. I hope you got some value out of it. I know a lot of these points are not blowing your mind. Obviously, these just make a lot of sense, and I hope you got some ideas, and most of all, take action, because if you don't take any action on these points, then obviously you cannot make any money and the opportunities slide by, and then 1 year 2 year from now you think about, oh, I should have done that, I should have done this. So take action now, set up whatever company you need to, earn extra income, save money, and learn about investing, and that's it. Thanks for watching this video. I hope you liked it. Consider subscribing, and I will see you on the next one. Bye bye.